What is up, guys? I'm back yet again with another one. Today, I'll be talking about why it's literally impossible to be consistent if you don't understand market structure. Okay, so when we talk of market structure, what exactly are we referring to? So in a nutshell, there are three types of market structures that we take into consideration. The first one I'll bring your attention to is what we call an uptrend. So as usual, as I always explain on this channel, an uptrend is characterized by higher highs and higher lows. And then we also have a downtrend. A downtrend is the exact inverse. It's the opposite, and it's characterized by lower highs and lower lows, right? So this is a high, lower high, lower high, low, lower low, lower low. So this is an uptrend, downtrend. And then the third type of market structure that we consider is what we call a consolidation. Now, this one is self-explanatory. All you have is the market playing between resistance and support. So we obviously look at these market structures on the higher time frames so that we can catch big swings in the market and we do not get false signals, all right? So now, without knowing these three types of market structures, you basically be in so much trouble to the extent that you simply can't become consistent. This is where you place trades in the middle of nowhere where you shouldn't be. And you're also privy to receive a lot of traps from market makers that will be moving the market most of the time against you. All right. So now in an uptrend, obviously our key points of interest will be the lows, because we always want to buy at a discounted price. All right. And similarly, in a downtrend, the key point of interest for us to sell will be at the highs, because we want to sell at a premium price. This is the natural sense of things. Human beings, when buying, want a low price, or what we call a discount. And when selling, we want a premium price. We always want to sell whatever product that we have for high. You know, why would you want to sell whatever you have for a cheap price, especially when you're trying to get a profit? Okay, so now that we have all these market structures in mind, let's just go to the chart and deal with this segment of the chart where I see a clear downtrend. So as usual, guys, I always tell you guys, these things don't present like a textbook. If it did, then it becomes so easy, but it's one's job to train their eyes via practice and also just proper exercise in how to look at these market structures, especially how they present themselves on the charts. Okay, so now in a downtrend, I said our key points of interest to sell are the highs. Okay, so in front of me, let's pinpoint high points in this area that seems to be a downtrend. Let's shade that area actually, so that we know the area we are dealing with. Okay, so this is a high point right here. And so when price moves away, we wait for price to come back and we will be selling the market in this region, because we understand that the price format in a downtrend is such that it forms lower highs and lower lows. Similarly, over here, we have a lower high over here. Price moves away and it comes back into that region and we want to sell. We continue going with the trend, all right? And then we keep going with the trend. This is also a lower high. Price moves away, it comes back, you sell. And then finally over here, you can see we have a high. Price moves away, it comes back and you sell. That's the whole point behind market structure. So now let's talk of the dangers of not understanding this. Let's pinpoint a few highs and then see how people get trapped. So if you don't understand market structure, you're likely to be an amateur trader, meaning you probably also focus on the lower time frames and you have no understanding of the higher time frame market structure. So at this high, when price returns, I want you guys to pay particular attention to the manner in which it returns, always. It usually returns in an impulsive wave, in an impulsive move like that. Let's scale down to the lower time frames so that you see the danger of sticking to the lower time frames, okay? So this is the H1, and let's scale down further. Okay, I think I lost that, but we can find it quickly. Let's see what it looks like on the M30. Okay, all right. Gonna have to find it in a more immaculate way. Where are we? Where's that key point of interest? Where are we? Come on, come on. All right, so this is proving, okay, great. This is the key point of interest right here. Okay, so we said we want to scale down on the lower time frames so that we see the danger really of sticking to the lower time frames when trying to take these trades, right? So now on the M30, this is what you have. what you have is that key point of interest we found on the H4, where we are definitely meant to be selling the market, right? But look what happens. Instead, if you're stuck to the M30, this is what you see, right? You see a resistance breaking, okay? What you see is this resistance breaking, and you probably buy the break, all right? If not, then you wait for the break and retest, right? So this is why the retest comes, and then they give you a little confusing candles like this. And in fact, they give you some bullish action here so that you think that the market is going up, and then you press buy because you have been taught that once a resistance breaks, it turns into support, and then your buy position is here. And then you sink once again, and the market continues down because on the higher time frames, we are forming lower highs and lower lows. We are in a downtrend. So you see the importance of understanding that higher time frame market structure. In fact, without understanding it, this is why I mean you keep getting trapped. All right, let's find another lower high and see how people would have gotten trapped if they don't understand higher time frame market structure. So this is a lower high here. Price moves away. When price comes back here, we should be looking for sell positions, not any buy positions, no matter what the lower time frame is trying to fool you to participate in. So once again, let's scale down to the lower time frames and see how the price behaved in that region, okay? All right, so this is what we have once again. So you see that coming into that key point of interest, we really have such a bullish momentum, all right? An impulsive bullish momentum that's such that to a natural eye, you would not be thinking of selling this market. But someone who knows the higher time frame market structure knows that we should be preparing for a sell because on the H4, we are headed down. Okay, so now let's scale down to the M30 to nicely see what's actually happening. Exactly, once again, that bullish action alone shows you what it means to not understand that market structure. In fact, what is likely to happen to most amateur traders is that they will have trend lines, right? So they will be trading on the lower time frames, and for them, they are following this trend line because they see bullish action and they're trying to figure out a way to join the bullish action. And once again, at the trend line touch, you get a bullish candle like that, and then you buy, and then the market simply goes against you. So we see this behavior repeating itself over and over again in the market, right? And this is only because people are failing to understand that higher time frame market structure. Basically, what we're seeing here is what I explained to you, right? What I explained to you, which is that in a downtrend, this is what we look for, right? Lower highs and lower lows. And at the highs, we have our key point of interest to sell. So we want to sell the market when price comes back in here. And obviously, how the price comes back into this region, it will always be impulsive, right? Even on the lower time frames, you have such impulsive movements to induce you to buy, any break of resistance that's probably somewhere here, right? And then when you buy it, you're going straight into the key point of interest and you're thinking you know what you're doing. And before you know it, this is what happens to you. Okay, so now let's just look at another high, still on this chart, in this downtrend, so that we see exactly this theory, all right? So that we understand that, look, this is happening all the time on these charts, okay? It's not a matter of once in a while. It's a matter of if you don't understand market structure, it's literally just impossible for you to make it. Okay, so we're in a downtrend, and in a downtrend, our job is to find the lower highs. And once we found that this is a high, we know that this becomes our key point of interest, such that when price comes back from this movement, when it comes in like that, we want to really be selling no matter what the lower time frames are telling us, we want to be selling the market. So now let's scale down to the lower time frames once again and see this time what the lower time frames were telling us. Okay, so now tell me, what sane human being would be wanting to sell a move like that? None, right? Because like I'm saying to you, they see such bullish action on the lower time frames, right? But a really experienced trader knows that, look, we just entered our key point of interest to sell on the H4, and we should be looking for sell positions no matter what's happening here. Once again, there's this resistance over here. Let's do this. This is a resistance, okay? Right, look at that. Resistance has broken, and guess what happens? The lower time frame amateur traders are happy, and then they buy the market. And to make matters worse, they wait for the retest sometimes. And guess what happens? They get the retest over here, right? And So sometimes you're going to get a little profit, but that does not mean that you know what you're doing. That's the problem with trading. Even within not knowing what you're doing, sometimes the market will allow for you to gain a little bit, just enough for you to keep coming back and donating in the long run and donating your money, because you're not understanding what's happening in front of you. Neither do you have a sound understanding of how markets move. All right. So in this example, you bought the break and retests. Maybe your stop loss was hit again here, and you got another impulsive run. But in a nutshell, if you knew what you were doing, you'd be looking for sell positions here. Why? Because on the higher time frames, i.e. the H4, we understand that we are in a downtrend. Okay, guys, so that's all I have today. I just wanted to explain to you the importance of actually understanding the market structure in front of you. You know, this game is not that complicated. If you can't understand the market structure in front of you, that's why you have all these other instruments to trade. You go to an instrument whereby the market structure is very pronounced, so that you can make calculated moves and make trades in reasonable places. See, another thing, market structure alone actually allows for you to make trades that have good risk to reward aligned to them. Okay. So once again, my mentorship goes ahead. I'm always available for those who want to learn. You know, I always say trading is a game of knowledge. You know, I think people should stay away from what I've seen, the blue screens from Instagram, and, you know, being shown stuff that is not centered around educating your mind. Because if you can learn this skill, this is such a beautiful skill, because you get to grow your money in the comfort of your home. But the thing is, you need to learn the skill. So education is key. If you need mentorship services, feel free to let me know. My contact is in the description below. And also, I also have my trade alerts and setup platform, whereby I send analysis on a daily basis in video format. That analysis is also aimed at educating one, as I give market direction and these key points of interest for clients to understand where to take their trades from. All right. Ciao. Cheers. Thanks.